Miss Lisa, you can stay off mute if you want. I like to have participation. So if you're in a place where you can participate, feel free to participate.
Um, when I talked to you last time, I shared a little bit about my situation.
Mm-hmm.
Um, Filed bankruptcy. Remember, I told you they told me I had to wait 6 years before I can buy a house after bankruptcy, and that was me going through my credit union.
Yeah. So the time frame that you have to wait after you file a Chapter 7 bankruptcy is actually 2 years after your discharge date to be able to get a government loan like an FHA loan. If you had a Chapter 13 bankruptcy, you actually only need a 12-month payment history on your bankruptcy to be able to be eligible for an FHA loan. If you were to need any down payment assistance, you'd have to wait 2 years after you finished paying on your 13. Did you have a Chapter 7 or a Chapter 13?
I had a 13, and
Okay.
I'm at 6 years now being out
Oh,
of it.
goodness. So the biggest things that people do when they file their bankruptcy is, they forget to rebuild their credit. So an important step is rebuilding your credit, grabbing a couple of 2 or 3 credit cards, just making sure you can establish a repayment history. That's the most important thing. Having a verifiable rental history is important when you've had a bankruptcy, but you don't have to wait 6 years.
Okay.
All right. Okay, so we have our next slide here. All right, your home purchase expert. That's me, just joking. So, me and my team, we work together to help you to get into a home. We help you with a plan. We help you with any questions that you have. Another key member of your team is going to be your realtor. So, the realtor partner that you have is a very important part of your team as far as helping you to purchase a home. Today, we have Miss Phaedra on the call with us. She's a realtor, and so she can help answer or address any real estate concerns that you all have while we're on here.
Hello, family. I'm sorry I was talking to Kim.
Oh, okay. So you were working. Awesome.
Yeah.
Great, great. So myth number one, I need a 20% down payment. A lot of people feel that they need a 20% down payment in order to achieve home ownership. So some of the um, apps that you use, like Zillow, let's see, what's another one? Redfin, Realtor.com. Some of those apps will share with you payment estimates, and they are based on a 20% down payment. However, having a 20% down payment to buy a home is not accurate. So in reality, you can buy a home with as little as 3% down. Some programs, depending on where they are or what your eligibility is, require zero down payment. So if you are a veteran, you can get into a home with a zero down payment. If you choose to buy a home in a rural area, you can do a USDA home loan, provided that you're qualifying for that with your family income, family size. So that's also a 0% down payment. But for most traditional first-time buyers, you can get into a home with 3% down with a conventional loan or 3.5% down with an FHA loan. And down payment programs are out there to help you with that down payment money. So if you're looking to buy a home, saving is important. Knowing if you have access to your 401k is important. But don't let those things stop you if you don't have them, because they're a down payment assistance program to help make home ownership affordable. So did anybody think that you needed 20% down to buy a home? Anybody on the call? Miss Lisa, were you aware that you don't need 20% down?
Yes, I was.
Very
Yes.
good.
Thank
Very
you.
good. Now, back in the day, now it might have been different before we all were home buyers, but grandparents and things, they might have needed larger down payments back in the day. Myth number two, I need perfect credit to get approved. That is definitely a myth. We just talked about that again when Miss Lisa shared her situation. So I need perfect credit. You don't have to have perfect credit. The reality is that you can get into a home with as little as a 580 credit score with an FHA home loan. You can even get into a home with a lower score than that if you have a higher down payment than the normal 3.5% down. So 580 is a healthy place to start. But having a higher score of around 640 is going to help you to get into down payment assistance if you're in Arkansas. If you're in Texas, you need at least a 620 in order to use down payment assistance. So just to give you all a little bit of background on your credit score, you have three credit bureaus that provide the data. You have TransUnion, Equifax, and Experian. So you're going to have three credit scores when we pull your credit. And if you put those numbers in numerical order, the number that the bank uses is called your middle credit score. So if you have a 620, a 640, and a 625, if you put those numbers in numerical order, 620, 640, 625, your middle score would actually be 625. So that's the score that is used by the bank in order to qualify you. There is also a different type of credit pool that's done for a mortgage. It's not a consumer model of credit reporting. It's going to be a lending model. So it's a different factor that's utilized to give you the scoring. It's not going to look like it looks on your consumer reports like Credit Karma or Credit Sesame, some of those things, or even some of your banking institutions that provide you with consumer scores. It's not going to be the same as what we pull when we actually lend you money. So just be aware that it could be a little different when we pull it. Now, if you're working on improving your credit, some of the things you can do are make sure you're paying your bills on time. Make sure that you're keeping your utilization low. 30% is ideal. And then you want to make sure that your installment debts, all of those things are being paid on time. If you have 2 to 3 active accounts, that's about what you need. So don't worry about having 6, 8 accounts open. That just gives you more of a risk of default. So the more accounts you have open, the higher the chances are that you could like miss paying something. However, if you already have 6 or 8 accounts open, don't close anything out. Just pay it off. Let it sit there and hang out, but don't close any open and active credit that you have. Um, Another thing that people run out and do is go buy a what to build their credit? What do people go buy?
Or
A car? Oh my goodness. So buying a car. We work with so many people who we look at their credit report and just 2 months ago, they went and bought a brand new car. So if you do not have a car note at this time, try to maintain the vehicle that you have because buying a home is so much more important. It's going to give you an opportunity to start building your wealth and have freedom, financial freedom in your future. So home ownership, let's put that before a car. But if you recently bought a car, don't let that deter you. Maybe you weren't aware at that time. Let's still see where you're starting at and what we need to do to get you into a home.
I wanted to say, I've had clients say this to me before. Just say if they already have like a 700 credit score, they feel like they need to um have like a higher credit score to get a better interest rate before they buy. Sometimes they say I'm gonna wait. Um, if they already have the score where they're eligible, to qualify, they think they should wait until the score gets higher. What do
Yeah.
you think about that?
So some of that it's their personal preference because some people are, well, I had a 760. They're like competitive, like in
Mm-hmm.
naturally competitive. But my thought to that is if you can get pre-approved and you can purchase a home, you should do it then. Having a mortgage on your credit is actually going to help you get to that 720, 780 or whatever score and help you to stay there because a mortgage is a very heavily weighted item on your credit. It's going to give you more payoff for the payments that you're making as far as the credit scores or the credit score moving up. So don't wait till your credit score is 7 or 800 because by that time, home prices could also go up, interest rates change, criteria for the guidelines of programs that we use, they're ever changing. So if you're in position to buy and you have a pre-approval, it's definitely a good time to get with your realtor and go ahead and get into a house. because that house could then potentially become a rental house for you, and you could get into another house by the time you're in the 700s, 800 credit score range. You could be on house number two. So don't wait. It's definitely my thing. How about you, Miss Phaedra? How do you feel about it?
I agree with you. I try to explain it to him, but I think sometimes it is personal preference. But I
Mm-hmm.
definitely agree with you.
Yes, personal preference. For some reason, that seems to be the only thing that people will wait for. We won't wait for that for a car. We'll go get that car.
I know.
Yeah, but I was
And
thinking,
then when you go get the car, they are constantly running your that's another thing. A lot of people think when if they're working on rebuilding their credit, because
hmm,
I had one of our clients say this before she filled out an application, but they think that when they're working on rebuilding their credit by filling out the application and having their credit pull, they think that that pulls their score down.
mm, yeah.
So,
And it can if you're doing hard pulls, right? It can.
exactly.
But we always start with what's called a soft credit pull. So I've been doing mortgages for 20 years and things have changed over that time. So now we actually have access to doing soft credit pulls. Not everyone does, and not everyone will take the time to do that because that's just another step. But it allows us to give you a good plan or tell you, hey, we're ready to go. Are you okay with us doing your hard pull? Then we'll go ahead and finish your approval out so you can start looking for a home. But a soft pull is not going to, drop any of your points or cause you to lose points.
Yeah.
That's a great question.
Tamika, I have a question.
Yes, ma'am, go for it.
Yes. So during my bankruptcy, the lawyer I had evidently didn't know too much about the bankruptcy law. So my mortgage is not showing on my credit report
Yep.
because it didn't get reaffirmed.
Mm-hmm.
And I didn't know that, because the lawyer didn't tell me that I need to have it reaffirmed
Right.
until afterwards. But there's nothing I can do about it now. Um, so even though I have like four different things on my credit report, I actually have five credits
Yeah.
versus four.
Right. Because you have your
So
mortgage.
how would you work around that as making sure I get a good interest rate for my mortgage?
Yeah, so you're gonna, again, you will likely have a FHA loan. We'll have to see where your credit score and everything is ranging, but your mortgage it will not be able to go on your credit report. What we will do is get a verification of mortgage, so you will get that. So since your mortgage was not reaffirmed, the mortgage company is not gonna even talk to us. You're going to have to call the mortgage company and say, hey, mortgage company, I've been paying my payment. I need a verification of mortgage for the last 12 to 24 months. Then they're going to send you a spreadsheet,
For how long?
12 to
You was
24
breaking up.
months. Oh,
Okay.
12 to
Well,
24 months. They're going to
okay.
send you an overview of your payment history. You're going to give us that payment history because we have to verify you have not had any 30-day lates.
Hmm.
And so that payment history is going to show your payment went in on this day, this day, this day, no late fees, blah, blah, blah. So we're going to be able to say your mortgage history is good. However, because it was not reaffirmed, you can't actually go back and do that step. And you're right. Some professions don't know what the other profession needs. So when it comes to an attorney or a tax professional, then you got the mortgage people, so we all don't know how the other thing is going to affect your ability in the other arena, right? So your
Right.
attorney may have been doing what they thought was right for you because now that you did not reaffirm that debt, it's not on your credit. You could just stop making your payment if you wanted to. And they can't bother.
Well, I mean, I think they were reported if I stopped making payments,
They
right?
cannot. But here's
Yeah.
the problem. We have to go back and get their verification of mortgage.
Hmm.
You have to keep making that payment. So
Well,
that's why sometimes they don't have you reaffirm it. We see that often. We see it often.
and to justify why she didn't have me to reaffirm is because I did not have the mortgage in bankruptcy.
Mm,
And I filed a Chapter 13. I
okay.
have all the debts in bankruptcy except mortgage.
Okay.
So I was paying it out separate from the bankruptcy.
Okay.
But somehow, the bank, found out I found bankruptcy and They decided to just take it off my credit report. So it was wiped off my credit report.
Mm-hmm.
And so that's why I think that's why she didn't say reaffirm, because after the bankruptcy was done,
Mm-hmm.
my history for my payments and stuff was wiped off from
Yeah.
all three bureaus.
Yeah. And that's
So,
just one of those things where, again, we should give you the information and then give you the option.
yeah,
Because that
yeah.
way, because you could have been like, I don't care what go down, like I'm gonna pay my mortgage. So
Hmm.
therefore it gets reaffirmed. But they may not even know that it's going to come off your credit. It could take this happening to that attorney a couple times and someone bringing it to their attention because they're not pulling your credit report. So they may not even know. This just might be a part of their process of how they do things, and they may not really understand how it's going to affect you. So until they reach out to the other side, like to me or someone else, so that they can see, oh, this is how it's affecting my client base when they do own a house, right? So sometimes we can get used to doing something so long that we just keep doing it that way. But then once we know better, we should change the way we do it.
Yeah. But
Yeah,
I just thought that was kind of strange when I didn't have the house in bankruptcy. That
right.
was the strangest part about it.
Yeah. I look
Um,
back over the
but
paperwork because maybe somewhere in the paperwork you did have to acknowledge all the debts possibly, and maybe that's how it got confused. Maybe as far as qualifying for it, you had to acknowledge everything you paid.
there's possibility. But
I,
like I
I
said, I
don't
was still
know.
making the payments. I was still making my payments outside,
Very good.
so
And that's
wasn't
what
missing
we
any
look at. We
payment.
look at your 12 to 24 month payment history.
Okay.
And so, because you won't have a rent history, you'll have a mortgage history, and that'll show that you've been good on your mortgage, and then you're gonna sell this house, buy another house. All that'll be fine. We have to do that often, actually. So you're
Okay.
not the only one. Some people's cars
So
come off their credit report because their car
okay.
doesn't get reaffirmed, and we have to go get that proof of payment history too.
Okay.
Yes.
One other question, you was talking about a soft pull on your credit and a hard inquiry. So your initial pull will be a soft pull, right?
For my
Okay.
team. That's how I operate. And so
Okay.
just for the hunt team. That doesn't mean everyone does that. I do that because we care about our clients. Not
Okay.
saying other people don't. I'm sorry, didn't mean to say that. But we want to take uh, the best care of you, like your family.
Okay. So before the does that one pre-qualify you or pre-approve you for a loan, the soft pull,
Yes, ma'am.
and then you pull again before we actually close on the house,
But we're
and
gonna
that's a
pull
hard.
again before we even like go look. So your soft pull gives us everything that the hard pull would give us. What just happened?
I
All
don't
right.
know.
The soft pull gives us everything your hard pull is gonna give us. So if you're like, well, Miss Tamika, I'm ready to go look, we're gonna go ahead and grab your hard pull so it's good.
Now,
The soft
educate
pull
me on
just
the
helps
soft
us.
pull
The
is going to
soft pull
lower your score
gauges.
too, right?
Say
Does
what?
that one lower? Does the soft pull lower your score?
No, ma'am.
Okay.
So there are people that we work with and they're in a lease, maybe 6 months, 8 months. So we'll do their soft pull, give them like a little soft pre-approval. Hey, everything's good. Let's still work on these things though, because we have time. And then we're gonna pull their credit report before they get ready to start looking with their realtor.
Okay.
Mm-hmm.
That makes sense.
So it just kind of eases you into the process instead of being so hard and, tough.
Okay. Okay.
Yes,
Yeah,
ma'am.
because I'm looking like, because it's going to be, this is the myth that I went through, is that once you get pre-approved, that's the hard one, and then they're going to pull it again right before closing. That's
That is
another
correct.
hard.
So
So
they're
I mean, that's too harsh. Why do they pull them twice?
So there's a program right before you closes that does a review of your employment and your credit, right? So it's
Hmm.
not necessarily another hard pull. It's kind of like a refresh of any inquiries or changes to your report. So it's not really a hard pull. It's just something they do in the background to make sure you haven't added any new debts. And we also call and verify your employment again. So we can
Yeah.
get verification of employment on day one of your contract. But within a 10-day window of your closing, we have to do an updated verification by phone or an email just to say, hey, this particular client is still at this same job because people do some interesting things.
Yes, I
Yeah,
understand.
they sneak and apply for they furniture shop before closing.
Yeah.
Uh,
Or they'll quit their job and won't say nothing.
yeah, because
Nothing.
some
Well,
people
how they
think
gonna afford the house?
They got
If they
other
put their
plans. I'm telling you, Miss Lisa, they got plans, honey, and they haven't
some
shared.
people think once they get approved that they're good to go, and not knowing that that does take place
hmm
before this bank gives you all of their money to buy a house.
Oh, okay.
So it's
So
Okay.
kind of
that's
like a compliance check, you know,
hmm
compliance check. Like even your pay stubs, bank statements, all those things have to be within a certain date range. So if you
Okay.
pay stubs today in April and you buy a house in July, I have to get pay stubs from June. I
Okay.
can't go back and reuse April. So,
Okay.
yes,
That
ma'am.
makes sense.
Those are great questions. Those are great questions. Myth number three, pre-approval versus pre-approval and pre-qualification are the same thing. So that is definitely a myth. Pre-qualification and pre-approval are two different things. When you're getting pre-qualified, you're giving us an idea of what you earn, an idea of what you have saved. You're giving us an idea. You're giving us verbal, or you've inputted the information on the computer yourself. With the pre-approval, we've actually verified the things that you've shared with us. So we've received your pay stubs, we've received your bank statements, and that's a pre-approval. We've reviewed those things, we've inputted it into the computer. The computer system gives you a yes, or there's one or two things where we have to get you possibly manually underwritten, and we've gone ahead and sent your file into underwriting. So that's one of the big things that we pride ourselves in is really taking care of you on the front end so that when you get ready to find a house, you can find it with like a peace about it. You know that you're going to close and that the rug is not going to be pulled from under you, that we've done the due diligence. Do you have any questions? Oh, Miss Tamarka, thank you so much for joining. Does anyone have any questions as far as pre-qualification or pre-approval? Or anything that they've heard that they are not quite sure about?
I had something I wanted you to tell them, but I just forgot.
Well, we've had clients that will tell us they're pre-approved or they got pre-approved with so-and-so, and then we might ask them for a pay stub, and they say, why you need a pay stub? And I'm thinking, you just said you got pre-approved with so-and-so, you ought to have it at the ready. But they didn't even give them pay stubs. They just put some information in. And most people we talk to, they really don't even fully understand how to read their pay stub, to be honest with you, because most of us, we look at what gets deposited. We haven't even looked at the pay stub. We're like, okay, I got my check. It's in the bank. This is what I have to work with. But we look at your pay stub, how many hours you work, whether you're on salary, what's the average been over the last 12 months? Have you got a recent promotion or pay raise? Do you receive overtime or bonus? Do you have any debts that's coming out of your pay, like a car note or child support? So there are a lot of things that your pay stub helps us discover that could help you actually. But more than anything, we want to not run into any roadblocks. So we want to get those documents legible so that we can analyze what we have to work with and issue you a full pre-approval and not just a pre-qualification. All right, myth number 4. My student loans will stop me from buying. And this is a tough one because there's so much going on right now in the student loan world. I don't know if anyone's has student loans that's on here today, but there definitely is a little bit of drama going on in the student loan world. But at the end of the day, your student loans do play a part in your ability to qualify or not. They don't stop you from buying. We have to come up with ways to help you get into an income-driven payment, or possibly do a consolidation so everything can be in one, and then you can do an income-driven repayment. So once we get your credit report, we look at the debts that you have, whether they're student loans or credit cards, whatever is going on. And then we match that against what your income is to formulate your debt to income ratio. If the student loans are going to put you in a place where you won't be able to afford the price point that you desire, then we do have to help you get on some type of income driven payment plan, because the guidelines we use for lending now have certain rules where we can't just count zero in most cases. So it depends on the loan program that you have, what type of student loans you have, and then what we need to do to manage that debt in order to get your debt to income ratio in line for qualification purposes. Does anyone on here have student loans or have heard any myths about student loans and home buying?
I do.
Um, I have student loans also,
Okay,
but I'm at the end,
you're at
so
the
I'm like maybe 6,000 to go.
okay, okay,
So it's only one, and that's because when I was in bankruptcy, it gained interest.
okay.
So I was at 5,000, but when I filed bankruptcy, it added like $2,000 more dollars to my,
Yeah,
student loans. So, but the payment is manageable. It's under $100.
very good. So something like that, not bad. It's not going to affect your debt to income ratio very much. Of course, that's not most people. There's a lot of people that would like to trade places with you right now. Most student loans, average debt, I think it's about $100,000 is what we see on credit reports. So if we utilize that, let's say this client is buying a home with an FHA loan. If they don't have a repayment plan on that loan, we have to count 0.5% of $100,000 for their monthly payment, which equals $500 a month. So depending on that person's income, that may take them out of range of qualification, and we have to advise them to try to get on a lower income driven payment, something above zero though. So we try to make sure that when we're working with each client, they understand their individual needs, because they're going to be different than the next person. So just like yourself, Miss Lisa, your situation is different than your girlfriend, next door, your girlfriend at work. So we have to definitely work within our own parameters, so that we can get into a home based on what we have and what our, let's see, I want to say what we're willing to do, because sometimes, you're willing to do some things and some things you're not, but we're going to give you options. So income driven repayments, is there a co-signer involved? We have to take all of that into consideration. Some of the solutions: paying your debts down, increasing your income, having a co-borrower on your home loan, and then just looking at the price point in which you're looking to buy your home. Do any of you have a roommate that's on here right now? Anybody have a roommate? No roommates? Everybody's like, no, no roommates over here. So,
No. Mhm.
No.
okay. So one of the things I was going to say is, if you do have a roommate and someone else contributes to your housing cost, consider going in on buying a home with that person. So if someone else is watching this that's not on right now, and you live with a significant other or a good lifelong friend, partner, considering going into home ownership together if you plan to continue living that way. That way you can be building some type of financial freedom for yourselves in the future and not always renting. So that leads us to myth number 5. Miss Tamarka, would you like to share something?
Yes, I was just going to mention as far as to let's piggyback on the student loans.
Yes, ma'am.
My recent experience, I actually tried to get the IDR.
Yeah.
Uh, However, they're not actually offering that form of method due to whatever litigation they have going on right now.
Yeah.
But I was able to put my student loan into forbearance.
Mm-hmm.
Yeah, same with me. I tried to do the IDR, but they said with everything going on that that's on the pause right now of them doing
Right.
IDR.
Yeah, and we've basically asked our clients to call, try, because all that's going to take you is time, sitting on hold for 30, 45 minutes, and I say call once or twice, see if you get the same response, right? If you're getting the same response, then we have to just use the guideline rules. So, and welcome to the call, Ms. Hicks. So let's say that if you have a $30,000 debt for student loans, we'd have to use, again, if you're using an FHA loan, we'd have to use $150 to go offset that payment. That's what has to be used. So we have to work within that debt to income ratio, the parameters of that. So there are things that we can change and there are things that we cannot change. So we have to work with the facts. We have to work within the guidelines and the systems of the world that are established, right? And sometimes things have us on hold, but then we also have to have the knowledge that when it's off hold, I got to run and take care of this right away because those things can be temporary setbacks. But let's look at the other things we can control, which are keeping our debts paid down, making sure we don't open any large new accounts to add to the debt to income ratio even more. So during this time that we're facing with government and some of the things that we just can't do nothing about, we have to look at what can we control and then work on those things that we do have the ability to control or impact. So myth number 5, renting is always cheaper than owning. Anybody have that myth that, renting is always cheaper than owning? Do we have any renters? I know Miss Lisa, you own. Miss Hicks, what is your thought about Miss? Hello, how are you doing? I can't see everybody that's on, so please forgive me.
I
And
think Miss Bass has a question.
okay, go ahead, Miss Bass.
No. I was just raising my hand to answer your question about who's renting.
Oh, she's renting right now.
Yes. So of course, before you become a homeowner, unless you're still living with family at home, you're gonna have some time of renting. And when you're renting, you're paying into someone else's ownership. So I'm gonna share an example of, let's see. What am I going to share? I guess I'll share our house again, our first house at Fort Hood that we purchased in the year of 2000. And then now it's the year of 2025. So we were blessed to be able to buy a home within our first year of marriage because my husband is a veteran and we did not have to have a down payment. Now let's back up to right before then. We lived in an apartment at Fort Benning, Georgia, a raggedy apartment, not just an apartment, but a raggedy apartment, okay? So this was in the year of, actually it was December 1999 going into 2000 when we first got married. That apartment was around 475 a month then. 475 a month, 2 bedroom, 1.5 bath, raggedy apartment. All right, so then we moved to Fort Hood, Texas, right? Again, our rent was $475. When we got into our first house, do you all think it cost more than rent or same as rent? Do I have any takers? More, same? Anybody? What do we want it to be?
I think
Less.
Wanted it to be less. I don't know what the Lord just gave me this because this is real life, right? So I wasn't in mortgage. I had a college degree in finance in a real estate concentration, but was not thinking because I'm just a consumer. I'm buying a house. I'm young. I'm ready to go. But we could afford that 475. So when the realtor was like, "Well, how much do y'all want to pay?" I'm like, $500. That's it, $500. So we get into our little house. Our payment is $760, right? It's almost twice the rent we were paying. But we couldn't wrap our head around that we could even afford that because we had been paying only 475. We should have started with a budget. No one recommended that. So we did start with a budget. We really truly didn't know what we could afford. And then we got into this house, which we could afford it. Thank the Lord for that, right? We could afford it. So let's go back again. We're in the year of 2000. Our interest rate is almost 8%. Our payment is $760. It is now the year 2025. 25 years, that house would be paid off had we kept it. So at this point in 2025, that house would rent for about $1,500 a month. So let's say that I don't have a mortgage on that house. I'm getting $1,500 a month. Now it's already paying 7 something plus 15. How much can I afford now without even having an increase at work? At least 2,200, right? So let's think about that. Now we paid this house off. Someone else is living there and have been living there because we moved a long time ago. So they're just paying into paying our house off. So we're not even paying the house off. Somebody else is paying the house off. And that's what we're doing when we're renting. Everything we're paying is going to someone else's pocket. So you could call that 100% of interest. There's no principal paying down for yourself. Now, certain stages of our life now, that might seem convenient because we don't have maintenance expenses. We don't have to worry about any of that. But what it never builds for us is a financial freedom, a zero balance on a house where we can go on a cruise and do those types of things. We're going to always be tied to renting and having a housing payment on our budget sheet. So even today, make this real plain. So even today, if something happened and things just went to crazy land for us, we have another property, not that one, but another one, that we could give the tenant a notice because it's not their house. So we could say, hey, Unit A, I'm moving back. I need you to vacate within 30 days. And that happens all the time. Unit A is going to be like, I can't believe they doing this to me. I've been paying this rent for 10 years. But the owners aren't really thinking about that. The owners are now having a financial emergency. They need a place to stay. So we have to think about a lot of those things. So home ownership helps you to have financial freedom, helps you to have stability and some type of like comfort, security. A lot of us, are we all women on here? I think so. But most of us as women, we want to know that we are like, we want to know we have security, that we have a place to come home to, that we have a house, we have a place. I know that's what we look for when we have a husband. We want some type of protection, covering. We want a feeling of security. So home ownership helps to provide that for you. And identifying what payment makes sense for you, that's kind of the first step right there. Identifying your payment. Miss Phaedra, you have anything you want to add to that? I know you work with a wide range of clients.
Well, not to make this about me, but home ownership also helps you build wealth because my home is helping me to buy another home, which I was going to tell you after the Zoom, but I am closing tomorrow. I, I stepped out on faith. I don't know how the house look on the inside, but
Sight unseen, y'all.
I will find out tomorrow after 2 o'clock.
Oh my goodness, congratulations. That's so awesome.
Yeah. So you can build wealth with real estate. And I know, sometimes you hear stuff like that from people that's in the business, but it really is true. I mean, I've been in my house almost really, I'm gonna keep it honest, guys. If I wouldn't have never, like, my house has paid me a couple of times. So if I would have never, I've refinanced before, and just recently with Tomekia, I utilized taking advantage of the Equity Express loan, which I paid some stuff off, and that's how I'm buying the house that I'm buying. But sometimes you can be moving so fast in life, and I had to sit back. I was like, well, if I would have never refinanced, I could have paid my house off. But at the same time, I've actually had a couple of good success stories from this house,
Yeah.
So sometimes I say, man, I want to move, but then I'm like, no, because I'm in a good price point, and I could just keep using it to just
Yep.
build build wealth for my kids and grandkids, because it's not about me no more. So that's my take on it.
That's a
Why rent when you can buy it? It will pay off. It'll pay off in the long run.
yeah. And things don't have to be perfect. Just going back to what we were talking about perfect credit, perfect, perfect income, all these things. Things don't have to be perfect. It's just like kind of like when we come to Jesus, like we're not perfect. We are coming as we are. And that's the same thing. When a door opens for you to become a homeowner, identify your price point, your budget, and take that leap, because I can't think of anyone who has said they wish they would not have purchased a home if they had the right people on their side, right? Because again, even in our current property, if something were to happen, we technically own this home. Do we still have payments? Yes, we still have payments, but we could easily move out of here into a one bedroom down by the river and rent this house out, and it would pay for itself. So you have options when you do own. You have options.
Yeah,
That's
and it's nothing wrong with renting, because I was a renter before. The
absolutely.
thing about it, when you're renting, that your landlord, it's a business for them. So they have to, like, their mortgage could be 700, but your rent payment is 1,200, because that's a business for them. So it's
Mhm.
nothing wrong with renting. And even if you like your first home, you can, depending on whatever your goals are, you can buy you a starter home,
That's right.
and that has equity in it, and use that home to buy you the home that you really want. So you do, like Tomekia said, you have a lot of options. And I'm a proud homeowner. I was a homeowner before I became a real estate agent. That when I was looking, that motivated me to get into real estate. So I've been doing real estate 19 years. But I'm glad that I'm glad to be a homeowner. And I'm not just saying that because I'm an agent, but I am.
I have a quick suggestion to, if you're hesitant about jumping into a payment that's a little more than you thought. For us, even like the 475 to the 760, one of the good practices we could have done, had we had time to kind of think about it, is set aside an additional $3,400 a month and see how easy that is. So if you're saying, well, I'm going to go from $1,000 rent to a $1,500 mortgage, try saving an extra $500 a month for 3 months to see how comfortable or uncomfortable that is. That's going to help you feel more comfortable about paying a little bit more for home ownership as well, because you will pay more for home ownership than renting in most cases, on a monthly basis. So this little chart here just shows you what your money is doing for you over time. If you are paying rent, what it looks like over time that you are basically, giving to someone else. So that's what we want to do, is start to pay ourselves. All right, the truth about home ownership: stability, appreciation, equity, security, and enjoyment. Now, I'm thinking about you again too, Phaedra. I don't know what you paid for your house, but you know what it's worth right now, and I bet you it's worth 3 times what you paid for it.
I feel like it is.
Mm-hmm. Yep.
Hmm. I
I
know.
know
Well,
it's worth two
I
times
know
what
it
we
is.
paid for
Yeah.
it. Huh?
Hmm. I know it is.
Yeah, yeah. And then if you think about, like you said, the couple of times you've taken a little bit off of it to do something else. But that's a
Hmm.
part of having that equity and utilizing that equity. You're utilizing your own resources, which is great. So I love that. All right, so here are what our next steps are: checking your credit, getting pre-approved, scheduling a call with us if you don't already have one or if we have not already met with you. And then this is our contact information here. And we hope that you have gained something to help you move forward in the right direction. Do we have any questions or concerns at this time?
I have one question. So, is this a more of a buyer's market or a seller's market?
This is an interesting market. I am gonna say I am going to say it's a little bit of both, and it all depends on what that seller needs, what they're willing to wait for. So
Hmm.
have some sellers that they have to, and I'll let Miss Phaedra share because she's looking at real estate more often. But you have some sellers that they have to move. So they're a little bit more flexible. But you have some sellers who will sell if the right number comes along. So it's kind of like when Miss Phaedra was looking for her investment property. She had to find the right situation that would entertain her negotiations. And that's a
Okay.
part of having a good real estate agent. So, Miss Phaedra,
I
what
would
would you like to add
say,
to that?
so what I would say about the market is, a lot of people watch like, the home buyer shows, and then they want to negotiate the price down. And that negotiating the price is okay, but probably what people don't consider. So say if it's a house that's listed for, I don't know, I'm just gonna say a 115 and you want to offer 90,000, that's fine. But you're also, if you get that property, you're taking your own property value down. And so the things to consider is when you make an offer, it's just all about what you're offering and what you're asking from the seller. So it's the market is kind of mixed because you have some sellers that, like Tamika say, they have to move. You have some that they're going to stand firm on their price, and maybe they don't want to pay closing costs, and they're going to stand firm on their price, and they don't mind letting their property sit on the market for a while until they get the right offer that works for them. Because just like buyers have closing costs, and then sellers have closing costs that they have to pay on their end. So it's all about the type of offer that you present, you know. So it's just kind of like that. It's mixed.
We had some folks on our street, they were elderly and they were moving to, a seniors community. And we call it gave their house away. So they sold their
Mm.
house at a huge discount. And so that affected everyone else's house in the neighborhood.
Oh,
But whoever
okay.
bought the house was blessed. They got the house at a discount. But then you got me come along because we were moving at the time. So we put our for sale sign in the yard at the real price. And they're like, well, we want a discount like everybody else. But then you got me that's like, what you're not going to get is a discount. No, I'm joking. Get my house away because I
Yeah.
wasn't in the position that I had to. So I said, okay, I'm gonna wait this out because the market was interesting. So I said, I'm gonna rent my house, I'm gonna wait this out, and we'll sell it when the market comes back. So you have people that can wait, they can afford to wait, they can keep paying their mortgage, all the things. And then you have other people who aren't. They need to go ahead and they just good with what they gonna make. They're like, let me take this money and run and go live on the cruise ship for 10 more years. Yes, ma'am, Miss Bass.
Thank you so much for this presentation. Will your slides be available or
Absolutely.
no?
We're gonna
Okay.
add it to our YouTube channel. So yes,
Okay.
you have access to it.
Awesome. Thank you so much.
You
I've
are
got to hop
welcome.
off. I got another meeting to hop into, but
Thank
thank you
you.
so much.
Yes, ma'am. Have a blessed one.
You too.
Yeah,
Bye-bye.
same here, Tamika. I got to go too. But
Okay,
thank
well,
you
we're,
for
we're,
putting
we're
this
gonna
together.
end it. I promised you 35 minutes, so I was trying to hold to it. But Miss Lisa, I really appreciate your participation. You had great questions. I appreciate you. Mr.
Mhm.
Andre, I thank you, sir. If you want to share your contact information, please do. I didn't see you in my contacts. So please share your information with us or send us a text. And we have great real estate professionals we can connect you with if you don't already have one. We have
Yeah,
one right here available to you.
I want to
So,
leave you lonely.
yep. So text us or leave your contact. Let us know how you heard about us, and we're going to continue to bring you all quality information, keep you motivated towards your goals. Anybody else have any final remarks? Oh, Miss Carla Davis, how are you? I didn't see everyone that was on. I'm so sorry.
I'm doing well. How are you today?
Very good. Do you have any questions, dear?
I was just wondering if you offer mortgages for modular trailers, modular homes,
We do. What state are you in?
Arkansas.
Yes, ma'am. We do have manufactured home financing for various types of homes.
Okay.
Yes, ma'am. So reach
Yeah.
out to us if do we have you in our contacts? I feel like we do.
Yes, ma'am, you do.
Okay, so make a note to reach out to us and we can kind of update things for you if we haven't in a while and get you moving towards your goals. But yes, ma'am, to answer your question.
Thank you.
You're welcome. Such a blessing to visit with you all. I can't believe this year is moving so fast. So I will let you all go. And if no one else has anything else, anything in the chat, Larissa? Okay. All right. Y'all have a blessed day. Thank y'all. Thank you, Miss Phaedra.
All
Bye,
right. Bye.
everybody.
Bye bye, friends.